You're tuned into Power Breakfast here on CNBC TV 18. Let's shift focus from the equity markets. Let's talk about the commodity space. Manisha Gupta joins in early this morning, as always, to tell us what's going on in the commodity markets as well as crude. Hey, Manisha, good morning.
Hi, morning, and thank you. Well, the crude oil prices have seen some support come back in. We have seen some buying in the New York session yesterday. Asia seems to be holding well, and this is as markets take cognizance of the fact that the OPEC output cut is a supportive factor here. It also has to do with the sanctions on Iran and Venezuela. That would start impacting the supplies into the market. That has been supportive. The factor that continues to weigh, though, is the US dollar index, which is now near 8-week highs. It's a second straight week when we are looking at the strength continuing for the US dollar. Also, if you look at the US oil production, that continues to be at record highs. And with that, you have the gasoline production, which also has been surging. And the demand really is quite tepid when you look at Asia and Europe. So that would continue to put some pressure on these prices. In the meanwhile, you have reports from Bank of America and Morgan Stanley, which say that the Brent prices could average between $65 to $70 per barrel for 2019. The next year, that is 2020, could actually be weaker when you look at the crude oil prices with the kind of output surge that is expected from U.S. Plenty events, data, etc., is what the markets will keep an eye on. The U.S. and China trade talks are top of mind, and that is what is putting pressure on the metal prices. So a second straight day in this week where we have started that market on a weaker note.
All right, Manisha, thanks a lot for joining us and giving us all those details. Well, let's switch back to equity markets. Another company to watch out for today is Bata, as it will be coming out with its Q3 numbers. Mangalam, good quarter this time around?
Well, the street is expecting a good quarter because the stock is at a record high, up around 72% in just the last 1 year. Not particularly cheap, trades at 48 times FY20 earnings, but that's exactly how most of the consumer stocks have been all through the course of this year. Why a good quarter is expected? Well, one, because it was the festive season which shifted to the third quarter. Secondly, the new collection premium products of Bata are doing fairly well. They've been received well. Thirdly, the company has gone on a cost-cutting rent rationalization spree, so that should aid margins further. And they're expanding their reach via direct as well as franchise routes. So those are the things that will aid the company's revenues. So what is the street working with this time around? 14% growth on the company's top line for Bata. The revenue is expected at around that 770 crore mark. Margins likely to improve with a 20% bump up in the company's EBITDA. 135, 134 crores is what the street is working with, 17.3% margins, and a net profit growth on the back of that at around 23.5%, close to around 84 crores is what our poll throws up. Important factor to watch out for in the reported results would be rent as a percentage of sales, because that, as you would see from the trend on your screen, has been declining. Let's see whether that declines further and gives some more operating leverage benefit to the company or not. Among the things that the company does not report in numbers, and we'll have to get management commentary on that, would be one, the same store sales growth, the share of premium products as a percentage of sales, how e-commerce has done, and how market share for Bata is trending. So those are a couple of things we'll get to hear from the management. But from the reported numbers, 14% top line growth, 20% EBITDA growth, 23.5% net profit growth is on the cards.
All right, we'll keep an eye out on that one, Mangalam. But tell us what's going on in the derivatives market as well.
Well, Nigel, as far as the derivatives markets are concerned, yesterday, while the Nifty did fall along with the mid-cap index, there was no support coming in from the cash markets. But in light of that, we saw the Nifty Feb futures premium. That one moved higher from around 13.8 points to about 20 points. So that's telling you maybe some bit of buying was taking place in the index futures space. And that's exactly what took place when the data came by. The FI has bought about 275 odd crores in index futures, 8,900 long contracts added. This compares with close to around 4,900 short contracts that were added. But the FIIs did not go long without any protection, because if you take a look at the put buying in index options, there was a fair amount of purchase to the tune of close to around 1,345 crores. Out there, nearly 3 long puts were added as compared to 1 long call, and close to 15,000 puts itself were bought in yesterday's trading session. While the Nifty did see a bit of a correction below the 10,900 mark, we saw all the put writers run for cover. So we had 10,900 as well as the 11,000 puts seeing some open interest unwinding, and at the same time the 10,900 call saw some writing for a premium of close to around 130 rupees. But this is the Feb month series. For this week's series, which for this week's options, which expire on Feb 14th, The 11,000 as well as the 10,800 options have been most active. So that is the range that the street is working with. And primarily because also if you take a look at the lower levels, we have the 20, 200 and the 50-day moving average between 10,800 to 10,872. Let's see whether those supports are taken or not. In terms of individual stocks, watch out for 3 of them. Reliance Infra comes out of F&O ban. The Reliance ADAG group stocks have been in and out of F&O ban for the last couple of trading sessions after the big moves that we've seen out there. So keep an eye out on some volatility there. Fresh longs added on Sun TV and a massive amount of shorts added on Apollo Hospitals. Let's see where it goes.